20% for the week overall.
All right, well, it's certainly a different story around the world, and I draw your attention to what happened in China over the last month. This is the NASDAQ Golden Dragon Index, down over the last 30 days more than 5.5%. We saw concerns about a renewed crackdown in the tech sector, escalation of the crisis, of course, when it comes to property developers, and then do not forget about what's happening with COVID-19 cases still in the country with a, goal of COVID zero.
Yeah. Debbie Downer, Tim.
Is Tim allowed to do the NASDAQ Golden Dragon? I thought that was only me.
Yeah.
I got your permission ahead of time, okay?
We talked about it beforehand.
Sharing the wealth, the focus on China, it's important to put it into context. The winners, the losers. Today, the winner of choice is the NASDAQ. We're up 1.8%. In fact, we're up more than 10% on the month. We've seen a cracking month and a cracking week for these indexes. In fact, volume is basically flat on the NASDAQ for the day, but we are at 222 points higher. The S&P 500 is where the volume is at. We're up 16% in terms of your average volume, so we're up 1.4% on the day. We're up 8% on the month. The Dow Jones seeing significant volume, up 50% usual versus average. It is up a percentage point, and we're seeing the Russell 2000. Actually, your underperformer, even though we have seen it outperform of late, it's up 0.6%.
It's so interesting. When you look inside the S&P 500, some of the things that drove the month higher are definitely driving the day higher. Energy up 4.6%. Consumer discretionary up 4.3%. You have all major industry groups in the green, except for healthcare and consumer staples, seeing a little bit of weakness today in the red.
I have a next chart, Tim, for you. If you can talk about China tech, I'll show you some U.S. technology
Different
as well.
story, right?
My U.S. tech board here. I think Amazon and Apple, we know the story. Green on the screen. It's pretty an interesting day when you get couple trillion dollar companies gaining double digits, as you see there. So you have the winners and then you have the losers, Intel and Roku. I read one analyst note, Tim, for you. Roku is a streaming hot mess.
Wow.
And of course, Intel, I think our own analyst sort of hit this spot on, Mandeep, when he was talking about losing pricing power as well as losing some market share. So hard to find some positives in that report as well.
I just got to jump in on Roku here. With a decline like this, you got to wonder who's going to come in and, if this becomes an acquisition target at this point, like who this makes sense for, because this stock has just been getting beat up.
Yeah, too many streaming services, maybe,
yeah.
Just maybe. Meanwhile, let's look on the rosy side, just in terms of if you are long these stocks. Everywhere's kind of won. Your laggard has been the Dow Jones Industrial Average, which is up 8.7% off of our lows. So since the beginning, middle of June, basically, is where we track this chart for our radio audience. We're looking up and to the right for every major index. I mean, really, it's the FANG indexes, it's the NASDAQ 100 and your overall NASDAQ benchmarks that are up more than 14%. But even the S&P has managed to be climbing so significantly. So across the board, we have seen really a desire to be finally maybe calling some sort of bottom, or is, as Morgan Stanley says, a bear market rally.
Oh my God, the debate continues, right, Carolina? I mean, everything is awesome. It almost looks that way in the equity markets, certainly for the month of July. The thing is, will the consumer continue to kind of keep propping up the economy? We've been watching some of those consumer sentiment numbers certainly today, and we did get some spending numbers that seem to say that consumers are out there spending. Well, our Bloomberg TV team caught up with the CEO of NatWest, Allison Rose, speaking earlier on Bloomberg, and gave us some great color when it came to consumer savings and consumer spending. Check it out.
Deposits still remain very strong. What we're seeing is households have a buffer in terms of their cash deposits, and there is still a huge amount of liquidity sitting on corporate and business balance sheets. What we're seeing at the moment in terms of debit and credit card spending for our customers is actually, although there are increases clearly, particularly in fuel and energy prices, the real increase in spending at the moment is on travel and hospitality.
And that, of course, is Allison Rose, the CEO of NatWest Group. But I just think it's interesting. I mean, this is the big thing, right? We have a consumer-led economy. How long does the consumer kind of keep at it? And so far, the numbers seem pretty strong. But we're going to get a lot of reads over the next couple of months. Yeah,
I mean, the consumer powers this economy. 2/3 of GDP in the U.S. is consumer spending. So obviously really important, but kind of a repeat of what we heard from these other companies, right? Jamie Dimon at JP Morgan Chase saying he sounds like a broken record a couple of weeks ago, talking about what a good position the consumer is in. Then American Express last week talking about about that. But I wonder, you know, what happens if you start to see people with less of a cash buffer not being able to afford those basics. And that is the big question I have going forward.
Yeah, affording the basics. And you have to wonder at what point you're talking about not just the ability to spend, but the ability to earn enough to spend. You saw Bill Ackman taking to Twitter talking about that wage price spiral, unions really starting to threaten strikes. We've had a lot of guests on this program talk about what a risk that poses into the end of the year. And the idea here that wages could go higher, and there are a lot of questions about what that means and whether they can keep up with the rest of inflation.
That brings us back to the big data point this morning, the employment cost index, and of course the core PCE, where the Fed, of course, is keenly focused. And again, the statistic for me is the back-to-back quarterly gains that we've had are some of the highest prints we've had since early 1984. And even though you're seeing a moderation in some of those average hourly earnings and private wages and salaries, they're still accelerating 1.3%. It's pretty incredible.
They are, but still it's a year-on-year growth of, what, 5%? That is not a real gain in your wage when we're seeing overall inflation running at 9%. No wonder people still, we worry about a recession, but really, as Janet Yellen, Treasury Secretary, said yesterday, it is all about inflation that dictates at the moment the sentiment. And of course, that was what you were talking to earlier, Carol, the sentiment at the moment just still looking pretty poor.
Yeah, and people are out there spending, but are they, you know, buying less because they have to pay up more for what they ultimately buy? And they are making choices, and we are certainly seeing that at the lower end of the economic stratum, if you will. And so you do wonder, when does this all start to come undone? And especially as the Fed continues to hike rates.
Yeah, I'm glad you brought it to the Fed, because we got a couple months until we get that next Fed decision. So, you know, what are we going to hear in terms of data points?
Are you talking about the next Fed decision?
I am, because, you know, I think there's, you know, they didn't give forward guidance, right? So there's a lot of uncertainty about what the Fed ends up doing. And the market, you know, the stock market's telling us that everything is good.
Yeah, it is pretty remarkable. All right, guys, we have lots more to talk about. We're going to count everybody down to the close, wrap up the Friday trade, wrap up the month of July, wrap up the week. Beyond the Bell, our simulcast on radio, TV, and YouTube. We will be counting you down to the close on this Friday.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Round and round we go. It's just pretty remarkable, the data points, the strength in the equity markets, you know, the 10-year below 3%. The Fed saying, hey, folks, we're going to continue, despite what Vince Signorella says, we're going to continue raising rates. That's what we got from Jay Powell and company. Yeah, take a look at that June dot plot. It clearly says what they are expecting to do when it comes to interest rates.
But what's the data that we get between now and then that tells us, okay, well, the Fed's going to, you know, stick to the path that the dot plot outlines?
Inflationary data.
Exactly.
Anything with inflationary data. We know it. They said, we're going to do what we have to do. If we have to overshoot, we will do that.
Do we have? I'm trying to see if, you know, it's going to take me a while to find it, but I'm trying to see if we even have, you know, inflation expectations data for, or what we expect the
some of that
CPI report is going to be.
Some of that played into some of the consumer sentiment numbers. Mike talked about PCE numbers that we got today. You know, the Fed, that influences what the Fed does. And so we talked about PCE core month over month, up 0.6%. That was up from the month before. What were you
I got it. I found it.
What are you looking
CPI, it's, you know, it's still, you know, we don't get it till August 10th. So what?
And what's it looking for at this point?
8.8% is what the survey says.
So that would be down
from 9.1%.
Yeah.
So, you know, it would still be really high, Carol.
Yeah.
But energy prices came down in July.
And if they continue to come down, that's a big deal.
Yeah, but 8.8 is really high.
Our cost of housing, we talked about rent prices, certainly here in New York City, they're really high. Of housing prices, they're still kind of high.
Very.
Right?
With mortgage rates up, too, that means your monthly cost is so much higher.
So, like, these are big factors that play into all of this. So, you know, I don't know how you know, that's what we're looking for, is this significant downward trend in inflationary pressures. Consistently. I don't know. We'll just watch those data points.
Yeah.
All right, lots more to come right here on Bloomberg.
Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. It turns out that text messages from the Secret Service are not the only texts that are missing from January 6th. The Washington Post reports texts from the acting Homeland Security Secretary, Chad Wolf, and acting Deputy Secretary, Ken Cuccinelli, are also missing for the days leading up to the attack. And the Post reports the DHS Inspector General did not press leaders for an explanation when he learned this back in February. Senate Judiciary Committee Chairman Dick Durbin is requesting an investigation by the Justice Department. House Republican leader Kevin McCarthy is addressing questions about his actions on January 6th, and today said he recalled making calls to the White House only after mobs were in the Capitol.
McCarthy was asked about testimony by Cassidy Hutchinson that he called her and others to dissuade President Trump from coming to the Capitol.
I don't remember that. I didn't watch the speech. I was working. So I didn't see what was said. I didn't see what went on. I had no idea he was even going to come to the Capitol.
McCarthy was asked about Trump running again.
President Trump was in office today, we wouldn't have inflation. We wouldn't have a national security problem at the border. We wouldn't have crime at a 20-year high.
A Republican House, McCarthy said, would run probes into Afghanistan, the origins of COVID, and a parent's Bill of Rights. In Washington, Irv Chapman, Bloomberg Radio.
There is another drawing tonight for the Mega Millions jackpot, now up to $1.2 billion. Washington, D.C. resident Hoon Lee is already dreaming about a win.
Maybe I'll buy a Tesla. Buy a nice house.
This is now the second largest jackpot in U.S. history. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in Washington, D.C., our 99.1 newsroom in the nation's capital. So, Tim, you talked about Meta Platforms earlier.
Yeah, can I repeat the stat? Because it's just
it's
so
pretty
wild.
remarkable.
So if you take, Facebook has essentially declined in value by about 60% since September. If you take that market cap that it's shedded, it's about $650 billion. That $650 billion that it's lost since September on its own would be the sixth largest U.S. company by market cap.
That's remarkable.
Facebook, by the way, Meta Platforms, is no longer in the top 10.
No, top 10 of
market cap.
Overall.
Yeah, overall, in the U.S. In the U.S.
Yeah, I mean, we talk about this a lot. I mean, it's just, this is a company that's going through a dramatic shift, right?
Yeah.
They renamed the company. They've talked about the metaverse, spending on it, figuring it out. It's a big... Speaking of pivots, it's a big pivot. I think the problem is it's long in coming, right? It's going to take a while to build this out. We don't know exactly what it means and what does it mean in terms of financially, the top and bottom line.
Who was it earlier this week we were talking to, Carol, who said when you find a company that makes a pivot like Meta
changes
did,
its name?
Yeah, it changes its name. It might have been Chalkmark yesterday.
James Chalkmark.
But yeah, James Chalkmark from Clockwise Capital. But it shows that there's, he implied that there was an identity crisis. So it was James Chalkmark. Forgive me, I'll have to go back and look.
Yeah,
but we were doing the interview ahead of their earnings.
Yeah.
And yeah, I mean, if there's an identity crisis like this happening, it raises questions about the future.
Yeah, it's a tough one. Meantime, we do want to bring you a couple stories. One by our Matt Boyle that talks about Meta Platforms grappling with its first ever quarterly sales slump. Now has another problem. Jobs in the metaverse are disappearing. New monthly job postings across all industries with metaverse in the title declined 81% between April and June, according to workplace researcher Revelio Labs, after surging the months following Facebook's rebranding last fall.
Another one that we want to get to, Meta Platforms also reiterating its warning that it may have no choice but to pull its popular Facebook and Instagram services from the European Union if any transatlantic data transfer pact doesn't materialize. Check these out on the Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are heading toward the closing bell. 43 minutes to go, and we've got the Dow, the S&P, NASDAQ, all at or near session highs. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks firmly in the green today, with the Dow currently up 320 points. S&P's gained 58, while the NASDAQ is higher by 1.8%. The U.S. 10-year yield at 2.65%. Gold is up 9. Energy is climbing, and Bitcoin is trading little changed. Among the main 11 S&P sectors, only healthcare and staples were in the red. And leaders to the upside in the Dow, Chevron and Caterpillar, while Intel fell 9% and led to the downside. Also, after earnings, Procter & Gamble fell 5%, while ExxonMobil rose 4.7%. And wrapping things up, GE rose for an 11th day. That's the longest winning streak since at least 1971. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and here live. Breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Broker studio. I don't know if you noticed it, Tim. You probably did because you watched this closely. Bitcoin and Ether, the world's two largest digital tokens, headed toward their best month since 2021 amid a revival of risk appetite in global markets and optimism about an Ethereum network upgrade.
I saw this and I thought to myself, talk about, correlation between U.S. equity markets. Because,
risk on?
Yeah, risk on. And I think that's certainly what we're seeing. I'm interested what we hear from Doug Schwenk, though, our next guest, CEO at Digital Asset Research. They provide crypto data, clean crypto data for institutions. We should note that Bloomberg did announce a partnership with Digital Asset Research back in June of 2022 to provide terminal users with clean crypto pricing. Doug, good to have you with us. How are you?
Great. How are you?
I'm doing pretty well, thanks. Well, I want to start with pricing and what Carol mentioned, that we're seeing the best month in what, Carol? About a year.
Yeah, since 2021.
Yeah, for Bitcoin and for Ether. Is this just risk on? Is that what it is?
Well, I think we're looking at the coming Ethereum merge where we go to proof of stake. That's really, I think, the biggest story in the near term. Obviously, there's a huge macro impact here as well. The fact that the Fed is raising rates as people expect, 75 basis points yesterday. I think that's a big part of the story as well.
Can you? I just want to follow up on that and have you explain proof of stake versus proof of work for our audience if they haven't been following this closely.
Yeah. So historically, Ethereum and today, Ethereum validates transactions with proof of work. So there are miners. You may have heard about this with Bitcoin. It's both Bitcoin and Ethereum. It's the way that that people in a decentralized network agree on transactions. So proof of work involves solving a math puzzle to agree on what the right solution to that puzzle is, and then if there's enough consensus, as it were, the word is consensus that suggests what we will all agree are the right transactions to validate on the network. Proof of work is a much more kind of computer-intensive algorithm versus proof of stake, where we're going to see people put their assets at risk. So I'm going to stake some assets, and if I can confirm transactions on the network, if I say, look, this Ethereum transaction goes through because it's a valid transaction, I put my assets at risk. And if I am wrong and I validate transactions that are nefarious, then I'll lose some amount of my assets. So proof of stake is a much more it's much more driven by what I put at risk instead of do I solve the right math problem and therefore confirm the right transactions.
So you're all about, first of all, there's a bunch of us who are like, okay, wait, I got to Google more and understand this. I mean, it's funny, I did a Future of Money panel at BNY Mellon Pershing Insight in June. Tim and I were there, and we were talking, and I had a bunch of crypto experts who really understand this, and they said, the language, where we are in this whole world is very, very early on, and there's, we're kind of learning and finding our way, Doug, on this, including the terminology. And so we're kind of learning as we go. But you talk about clean crypto pricing, and that's what you're getting to, I assume.
Well, we think about pricing coming from those who are transacting data. I think that's a little bit different than the validation, the proof of work, proof of stake, the Ethereum merge. We pull prices from the likes of a Coinbase or Kraken or similar types of exchanges, and we try to clean up those because it's a very unregulated world, and when exchanges are unregulated, we see some bad behavior. And so when we think about like wash trading or KYC and AML issues or other types of things, we just want to make sure that the price that people see is a high quality price. And we've seen from people like Michael Saylor at
MicroStrategy.
He said, look, MicroStrategy, yeah. He said, look, I can't rely on what I see out there. And that's been in the Wall Street Journal. It's been on Bloomberg. It's been in other places. Look, we want to make sure that when people are relying on a price, they know that it's a high quality price.
I mean, that's what happens when there are different exchanges selling sort of the same thing, right, Doug? I mean, okay, Doug, we only have a minute left, but I want to get your take on this because Carol and I were talking about this ahead of the interview. And it's just, I think a lot of this is so confusing for the end consumer. And I wonder if that is a barrier to adoption. That plus the volatility that we've seen over the last year. Is that a barrier to the adoption in the industry?
And just have about 30 seconds.
Of course. It is a big barrier, and I think there's lots of help that we could see from regulators and the congressional and other leaders who could bring kind of clarity to some of these issues and help us with a better framework for crypto prices. But absolutely, it's a huge barrier.
Well, we'll be sure to continue this conversation with you, Doug, in the future. Doug Schwank, he's Chief Executive Officer at DAR, Digital Asset Research. It's a provider of crypto asset data and research, joining us on the phone in New York City. I mean, we're learning as we go here.
We are, and I think the consumer certainly is too, especially with the crash that we've seen.
Absolutely. Bloomberg Business Week, Carol Massar, Tim Stanovic, live on radio and on YouTube.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, check it out. The NASDAQ up, I don't know, about 11% so far this month, adding about $1.5 trillion to market value. We are going to talk big tech in just a moment. Apple, Amazon, Alphabet, Meta. We've got a lot coming up.
First, though, let's get a check of the markets. Here's Charlie Pellet.
Thank you very much. And here's what's going on. We've got 28 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ, they are all moving higher, with the S&P right now up by 1.6%. We have got the Dow Jones Industrial Average holding close to session highs, up 350. That is a gain now of about 1.1%. And NASDAQ surging 246 points for the NASDAQ Composite Index. We're looking at a gain right now of just about 2.1%. So a big day for the U.S. stock market. Techs are rallying today. Apple, for example, after earnings, up now by 3.5%. Amazon, after earnings, up now by 11.6%. 10-year yield, 2.65%. We've got the 2-year, 2.90% on the 2-year. Gold is up 0.4%, $17.62 the ounce, while West Texas Intermediate crude up 2.2%, $98.50 for a barrel of WTI. After earnings, Roku shares are plunging. The maker of streaming TV devices says advertisers are pulling back on spending because of economic concerns. Roku right now is down 23.1%. And Meta Platforms, which is grappling with its first ever quarterly sales slump, and now it has another problem, and that is jobs in the metaverse are disappearing, according to workplace researcher Revelio Labs. New monthly job openings across all industries with metaverse in the title declined 81% between April and June. Shares of Meta Platforms today are lower by 0.7%. So again, recapping, a stock market rally underway. S&P up now by 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, that stock market value and rally going up thanks to names like Amazon and Apple. We wanted to do a big tech roundup today because it's been so much part of the theme this week. With us right now, Bloomberg Intelligence Senior Technology Analyst Mandeep Singh on the phone in New York, Bloomberg News tech reporter Mark Gurman on all things Apple on the phone from LA, and Poonam Goyal, Senior Analyst for E-commerce, Athleisure, Off-Price Retail of Bloomberg Intelligence. She's going to talk Amazon. She's on the phone in New Jersey. We're going to start with Mark.
Yeah, Mark Gurman. Look, this is just an all-star group, and we want to really get everyone's take on what the big theme is when it comes to what we heard from these companies as they reported. Mark Gurman, you watch Apple more closely than pretty much anyone else. Your takeaways from a quarter that really showed us that the consumer worldwide is pretty resilient.
So my take is a little bit different than some of the other takes I've seen out there about Apple's earnings report. I don't think it was that impressive. Certainly the iPhone number was good. It came in higher than anticipated. Overall revenue was in line, right? But you're still seeing 3% growth compared to 36% growth in the year-ago quarter. You saw 3 of Apple's 5 major product segments report year-over-year declines, as well as miss Wall Street expectations. You saw a decline, a very small one, on the iPad. You saw a miss on services, despite 12% actual year-over-year growth. You saw a significant miss and a significant decline on the Mac. And out of nowhere, completely out of left field, you saw a major decline and a major miss on wearables, home, and accessories. That category, really big part of Apple's future. AirPods, Apple Watch, TV, home accessories, right? So altogether, as Tim Cook said, it was a mixed bag, and, I think that's the case. But I certainly am not as optimistic about this earnings report as I think others have been.
Apple shares, by the way, are up 19% so far this month. All right, so let's get to Amazon. Poonam, a lot of enthusiasm as well by investors as a result. We've talked with you about this. What's the big takeaway? What's the long view when you look at a name like Amazon?
I think Amazon has still a lot of room to grow, and I think that was the concern going into 2Q. Amazon was able to show that it can weather inflation. They're expecting $1.5 billion in savings through better fulfillment management into the third quarter, but that will be offset as they invest in growth for cloud as well as media. That said, the guidance was very impressive, 13 to 17% sales growth in the third quarter And part of it was driven by the shift in Prime Day, but still, if you look at the underlying number, taking out that shift, it's still a high single-digit, low double-digit grower, which is pretty good coming off of single-digit growth in the first half. And we really do think that Amazon can continue to grow at a double-digit pace for years to come. It's still in very, very early stages across its AWS business, advertising, as well as media. And online, too, has plenty of opportunity to still grow, with 3P rising and becoming closer to 60% of their mix.
Yeah, and look, I should say that Carol reminded me that Amazon up 28% this month, so it's been a remarkable run this month. Hey, Mandeep Singh, come on in here, and I want to start with Meta Platforms because it's an outlier when it comes to the big companies that we've heard from. As I mentioned earlier in the program, $650 billion of market cap coming off of Meta Platforms, the parent company of Facebook, since its September highs. Is this the turning point for the company?
Well, so a lot is priced in the valuation, and expectations have come down dramatically because Meta for the longest time was growing 20% plus, and really they had the best operating margins out of all the large tech companies. So I think their pivot to metaverse really was ill-timed, and that to me is where they got it wrong. But at the same time, they're spending a lot of time on fixing the core business now, and advertising is cyclical. It will come back, and so what the market is telling us is probably if Fed pauses and things kind of normalize here, maybe advertising will pick up. And look, Meta isn't going away. I mean, they're still doing $120 billion in revenue run rate. So I think expectations are really low going forward, and that could be a catalyst. But they have a lot of things to fix, and the pivot to metaverse will not work, at least for the near term.
All right, guys, we got about 1 minute, 20 seconds left. Rapid round here. So, Mark, based on, because you definitely had a much more downward view, it felt like, on Apple and the results there. What does it, just in 20 seconds, what does the Apple results tell you about the economy? Or the consumer?
Well, the Apple results tell me that people are being more choosy about where they're spending. People are willing to buy a new iPhone. They might not buy a new Apple Watch or AirPods to go with it.
All right, Poonam, what does the Amazon results tell you about the consumer and the economy?
They tell me that the consumer, their consumer at least, which is a more affluent consumer, isn't trading down like we heard from Walmart earlier this week. So still pretty strong and spending online. All
right, Mandeep, when it comes to the parent company of Google, Alphabet, and Meta Platforms, the parent company of Facebook, what does it tell you about the economy?
That search is holding up, and I think that part of the economy is strong. People are spending on services, travel. That's why Google did well, and they are still pulling back on spending time indoors, which is why Meta Platforms was such a big disappointment.
Well, and so it's just interesting that, the different takes, and certainly we saw how much momentum this certainly has provided for the markets. Guys, we said it was an all-star lineup. We so appreciated it. The Tech Roundup with our own Mandeep Singh of Bloomberg Intelligence, Mark Gurman, tech reporter at Bloomberg News, and Poonam Goyal, also with our BI team.
Let's get to Washington, D.C. for another all-star. Nancy Lyons standing by for World and National News. Hey, Nance.
Thanks, Tim. The death toll keeps rising in eastern Kentucky from severe flooding. It's now up to 16. Governor Andy Beshear says they're still searching for the missing, so that number is expected to grow. He's also asking for help with a variety of needs.
We will need water and cleaning supplies. We will have a list of shelters out. They include at least a couple of state parks, Buckhorn and Jenny Wiley. People can also help by donating to the Team Eastern Kentucky Flood Relief Fund. That is Team EKY Flood Relief Fund.ky.gov.
Governor Beshear also commended the Biden administration for quickly approving a disaster declaration. 9/11 families are in New Jersey today protesting near former President Trump's golf club, where a Saudi-backed live tournament is being played this weekend. 9/11 survivor Tim Frolick says the former president and the players have accepted blood money from the Saudis.
It's simple. The Saudis did it. They plotted it. They funded it. And now they're trying to distract every one of those sins with a golf tournament 50 miles away from ground zero.
Again, 9/11 survivor Tim Frolick protesting outside Trump's Bedminster Golf Club. 15 of the 19 9/11 plane hijackers were from Saudi Arabia. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
The amazing Nancy Lyons in our 99.1 newsroom in Washington, D.C. Got to say, what we just talked about with our trio of Mandeep Singh, Mark Gurman, and Poonam Goyal, two members of our Bloomberg intelligence team, and of course, Mark Gurman, Bloomberg News technology reporter, really just that roundup. Like I always think when we get to the end of the week, all right, so what are the takeaways? And we heard about it in terms of Apple, Amazon, Meta, and Alphabet.
Yeah, look, Meta Platforms is really the outlier here, Carol. And I think it's fair to say a lot of the problems at Meta Platforms can be traced to competition. Competition from Apple when it comes to ad tracking and what Apple has done with its update to the iOS ecosystem that makes it more difficult. You know, people essentially have to opt in if they want to be, targeted by ads.
I don't know about you, but I opt out.
Yeah, I think I did too. I mean, I don't even remember. And this has been years in the making. And the other one is TikTok, Carol.
Yes.
And the competition that it sees from, well, I don't want to call TikTok an upstart because it's a $300 billion company.
Well, this is, we are in the midst of, I think many would argue, a big story between the dividing of the world between the U.S. and China and the different paths potentially that the two sides will go and also the collaborations that they need to do. But nonetheless, this story by Olivia Solon of Bloomberg says a Chinese government entity responsible for public relations attempted to open a stealth account on TikTok targeting Western audiences with propaganda. This is according to internal messages seen by our Bloomberg News team.
The attempt, which was met with pushback from TikTok executives, highlights the internal tensions within the fast-growing social media app, which is owned by the Beijing-based ByteDance Inc. It has constantly attempted to distance itself from Chinese state influence. But Carol, I mean, you have this impression that because of TikTok's owner, there are people who don't actually want the app on their smartphone.
Right, exactly. And this is, part of, I go back to that bigger, broader story between the tensions between the United States and China, and this is the concerns about U.S. perhaps buying any kind of Chinese-based technology because concerns about privacy and what that means maybe for the access for potentially Chinese entities in the Chinese government. All right, you're listening to Bloomberg Business Week. You are watching us on YouTube on this Friday, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, all pushing higher. S&P right now up by 1.6%, looking at a gain of 65 points. Dow Industrials rallying now by 1.1%, up 359 points. And the NASDAQ Composite Index, the outperformer here, up 256 points, up by about 2.1%. Key takeaway, tech stocks are rallying. Ahead of the close, going to be a big week for the S&P, up by more than 4%. Some of the companies reporting earnings last night, rallying big time. Techs including Apple, up now by 3.6%. We've got Amazon up by 11.3%. 10-year yield, 2.66%. Spot gold right now up 0.3%, $17.61 the ounce, while West Texas Intermediate crude oil rallying right now by 1.8%, $98.18 a barrel. So again, recapping, tech rally underway with the S&P up by 1.6%, NASDAQ up by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Rather unexpectedly, the 117th Congress is shaping up to be one of the most productive in recent memory. A new compromise reached by Senator Joe Manchin and Senate Majority Leader Chuck Schumer could prove to be its most significant achievement yet. The deal announced on Wednesday would accomplish nearly all of the most important goals of Biden's initial Build Back Better proposal without its most controversial baggage. Notably, it would offer nearly $370 billion for climate and clean energy and put $64 billion toward extending COVID-era subsidies for Affordable Care Act health insurance, helping millions of Americans avoid major premium increases. Plenty of details remain to be ironed out, of course, and pitfalls still lie ahead. But all told, this compromise looks like a big win for Democrats, the White House, and, not least, the American taxpayer. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, tick-tock. Just about 10.5 minutes left in today's trading session. Tim, we are getting ready to wrap up the day, wrap up the week. It's been a risk on trade, wrap up the month, and we know it's been an unbelievable one for equities overall.
Yeah, it's been pretty remarkable. For the S&P 500 up 8.3% this month. The NASDAQ composite up 11% this month. Still not positive for the year, but what a difference just a month makes. Really curious to hear what Jimmy Lee has to think about it. He's the founder and CEO of the Wealth Consulting Group. They've got $2.9 billion in assets under management, and I would imagine after a rally in the last couple of days, that number's gone up a little bit. Jimmy joining us on the phone from Las Vegas. Jimmy, how are you?
I'm great, and good afternoon.
Yeah, good afternoon to you, too. So the big question that Carol and I have been asking each other off air and asking our guests on air has been, is this just a bear market rally? Because we're getting so much conflicting data here.
Well, I'm a little surprised that we've had such a strong run with equities.
You're not the only one.
Yeah, without having a better inflation print, at least one. But as I've been saying for the last few months, I think that we could be in for a strong fourth quarter. Looks like we're getting it a little bit earlier. So what I think has changed is that maybe while the consumer sentiment is still awful, just horrible, I think investor sentiment may have changed. And maybe instead of selling into the rallies, it's going to be more about buying into the dips again.
Who do you believe, consumers or investors? And some of the economic data points I will point out that we've talked about certainly today are Michael McKee, who follows global economics, says, a lot of this data is backward looking. You have to remember that. Markets tend to be forward looking. So I'm just curious, when you look at it, and then let's throw the bond market into it, that 10-year, I feel like comfortably staying below that 3% mark. I mean, how do you kind of, size each of them against one another?
It's very confusing, and especially with the bond market, but I think that the consumer is still strong. I think in certain areas of the economy, such as housing, other areas that have been, that were just bid up so high, I think obviously we're seeing pullbacks there, which is great. I think it's healthier to get that in some of these sectors that were so hot. But I think that, again, I've been talking about record cash balances with the consumer, which we know makes up the majority of our U.S. economy. And so as long as the consumer keeps spending, then businesses can also invest down the road. So, I think that's the key is consumers need to continue spending. And one thing that, I've been noticing over the last several months is that not just the consumer, but major investors were so bearish. It's been a long time since I felt that so many investors, professional investors, were so bearish that it made me feel like we could have been kind of nearing the bottom, and here we are with a nice bounce.
We have seen, though, and our Vince Signorella has written about this, Tim, we talked about it, that the U.S. personal savings rate as a percentage of disposable income has been dropping steadily since the pandemic, while revolving credit, we're talking about credit card debt, has been steadily rising. Jimmy, doesn't that maybe bar you that at some point that's going to all come home to roost?
As long as we don't go into a real recession, I think we'll be okay. So sure, those statistics are not good. And there was a lot of money, still is, floating around our economy. But as long as we don't lose lots of jobs across the board, across, industries, I think we're going to be all right. And so I think, while the long end of the bond market is predicting kind of a weak economy, I think what we could be set up for is a very volatile third quarter. So maybe we end up, getting some sell-offs off these recent gains, some profit taking from traders. But I think in the fourth quarter, we've got some catalysts, such as potentially Ukraine. We've got the Fed, which is the biggest one. So if the Fed, at some point when they say that they're going to pause, my guess is that the market's already going to be up 15% by then, which we may be getting close to now. But that could be a huge
up 15% from lows?
From the lows, which obviously we're pretty close to now. So we could get some trading back and forth. But by the time they say that, I think we're going to get a lot of the returns back already. And then once they say that, I think that's going to help sustain a rally in equities.
So you don't think the Fed is going to continue raising rates? You think a pause is coming in September? I want to make sure I understand this.
No. I think they're going to raise rates at least once or twice for sure. But the second time could be much lower, as most people predict. But the futures markets are predicting. But if the economic data seems lousy, and if inflation data actually comes lower over the next several months, then I think they've got a chance to say that. And so as we talk about information lagging, I actually do think inflation is getting better. We just haven't seen it in the numbers yet. And so hopefully this next month, we'll see that.
Hey, you're watching the high yield market. Always important to get an idea of whether or not we're starting to see more companies get into trouble. Tell us more about that and what you are seeing.
Yeah, we've been watching that, and it's one of the triggers that we use to be risk off to a degree. And but the spreads have kind of tightened a little bit. So as they were widening, we were getting a little bit concerned. But what I do know is that there are some institutional investors out there that are getting ready for a potential opportunity if we do have a recession, and if there are opportunities to buy distressed debt at major discounts. I know that a lot of the players that have historically done that are getting ready to do it, raising funds and calling on people like us to see if we have investors that might be interested in that. And so we're really watching that, but they've tightened a little bit, so it's getting a little better.
What about when it comes to the global outlook here and how you're thinking about Ukraine, how you're thinking about energy in Europe, and how you're thinking about China?
Yeah, I think that it's going to get better. So I'm hopeful, that as time continues on, that the global economy becomes more and more open, and China, doesn't close up again. And so I'm hoping that the COVID situation gets better, not worse, and that the global economy improves. I think the U.S. will lead it. and again. But I think there are some values overseas, and so I think investors still should be allocated overseas.
All right, we got to run. Hey, listen, nice to spend some time with you. Jimmy Lee, founder and CEO of Wealth Consulting Group, and it has about $2.9 billion in assets under management. Joining us once again on the phone from Las Vegas. You know, takeaways there, consumers still strong. You know, it is hard, though, to square some of those conflicting signals that are out there. And he talked about the record cash balances of consumers. But these are all important data points that the Fed and others will be watching to get an idea of kind of where we go from here.
Yeah, but in an inflationary environment, how long do those record cash piles last?
I don't know, right? If we're using more money to pay for things, or do we stop buying things to kind of rein it in? All right, folks, time to head over to our TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are just about 2 minutes away from the end of the trading day, the trading week, the trading month. Caroline Hyde, Taylor Riggs, Shonali Bassett, counting you down to the closing bell here to go Beyond the Bell with the global simulcast is Carol Masser and Tim Stenovic, bringing together our Bloomberg TV, radio, and YouTube audiences worldwide. We look at a day that was committed to the month's rally, really, Carol.
Yeah, absolutely. It's pretty remarkable, right? And we've talked about the increased volumes that we've seen on these up days in these major equity averages, and we're going to get into the major industry groups in the S&P 500 shortly. But it does look like, Tim, that investors are willing to place money almost everywhere, even crypto, right, getting a bump.
Yeah, it's a real risk-on day. We just talked to Jimmy Lee, the founder and CEO of the Wealth Consulting Group, and he said that he thought that there would be a strong fourth quarter, and he thinks some of that demand has been pulled forward to this quarter, but still he's surprised that equities have had such a strong run given the hot inflation prints that we continue to get.
Okay, Cali boy, pop quiz.
Okay,
How much have yields on the 10-year fallen this month?
20 basis points?
35, the most since when?
2 years.
March 2020.
Good job.
Okay, not bad, right?
Not bad. So, I mean,
it's Cali on Cali average.
I might text Romaine or something.
I know.
Okay on this
I
quiz.
love a good pub quiz when Romaine is gone.
She can't bring her Cali to Chicago. She's bringing it Cali to Cali fight. But really, I mean, Shonali, this has been a day where we have seen risk sentiment shifting, but the bond market feels like it's telling a very different story. It's more worrying.
Yeah, it certainly is. And that's the point that Taylor is trying to make here, too. The bond market is saying something the stock market isn't. So which force do you listen to?
At the moment, the force is of the higher side in the markets across all major benchmarks. We've got 10 seconds, and as these markets really close and start to settle, we see the ringing of the bell, the cheering, and in S&P 500, that in the depths of July, when most people, I'm sure, are taking a break, we actually still see volume really pump higher. We're up 21% in terms of volumes on the S&P. We're up 1.4% on the day, 58 points higher, but that means we are up 9% on the month. We're up more than 6% on the month for the Dow Jones Industrial Average, up more than 1% on the day, as you'll see, 316 points higher. The Russell 2000 actually underperforming, but has been getting pretty well bid over the course of the month as we have potential for domestic stocks not to be hit so much by dollar strength. We're at 12 points on the day. And largely, let's focus in on NASDAQ. Big tech, your winner, up almost 2%, just coming off of the day's highs, Carol.
All right, so the year of superlatives definitely continues. I'm going to take a look at what are the best performing names in the S&P 500 for the past month in July. Enphase Energy, so that's a renewable energy company, up 54%. Bottom of the pack, though, Newmont, which is down about 27% for the month overall. So just to give you a little flavor, Shonali, in terms of the trade this past month.
Yeah, let's take a look at the trade today because there are some sectors that are significantly in the green, Carol. And if you take a look at that, that's retailing, up more than 6%. You're seeing that bid in the consumer discretionary stocks. You're also seeing autos up 5.4%. You're seeing a lot of green on the screen here in a pretty broad-based rally on the last day of this month. This trading day has really been full of a lot of breath here with a very few sectors, only 3 just barely in the red.
All right, so let's get to some of the gainers. Pretty easy to pick, certainly on this up day again. Let's go to Amazon. We've talked about it. We know the reasons why, but top of the S&P 500, top of the NASDAQ 100, finishing the day with a more than 10% gain. It's up roughly 28% so far here in July, so pretty amazing and pretty standout. You know, though, all the reasons why. Apple, another one that quarterly update last night. That stock was up about 3.25% in today's session. It's up almost 19-20% so far here in July. So again, some really strong outperformance. And then I just want to take you to Chevron, which was up almost 9% in today's trade. Both Chevron and Exxon posting their highest ever profits. We did have Chevron too lifting its buybacks about 50%. What's interesting is these 3-4 companies added hundreds of billions of dollars in terms of market cap to our overall market today, Tim.
All right, well, different story when it comes to decliners. We got to start with Intel. Shares falling the most today since October of 2021, finishing the day down by more than 8.5%. The decline coming after the company slashed its annual forecast and reported steep drops in PC and server chip revenue. The company's CEO, Pat Gelsinger, telling Bloomberg TV earlier today, quote, "We deserve to be down today with the earnings we've reported and the guidance we gave. It is a bit of a reset. We've disappointed ourselves and our shareholders." So repeating what we heard in the investor letter yesterday. P&G shares falling today by more than 6% after the company early this morning forecast for earnings and sales growth that lag Wall Street estimates. It's all about inflation there, and inflation affecting that company more than other CPG companies that we've already heard from. And then we got to talk about Roku's worst day as a public company, down more than 23%. It's actually at its lowest price since March of 2020. So all of those gains it had during the pandemic are gone. The company issued third quarter revenue forecast and reported second quarter results that were weaker than expected. It cited a slowdown in TV advertising spending. As a result, we also saw other companies that operate in the space fall today as well.
So a little pulling back. There is your caution. There is your worry of companies not wanting to market quite so much, trying to dial back their own costs. I'm looking at what's happening across asset as well, Tim. Interesting day in terms of FX, because many people feeling that maybe this market has rallied so far because of short covering, basically, in the world of stocks. Is that what's going on in the world of FX as well? The Japanese yen strengthening by 0.7%. Remember, it's been basically the biggest macro trade out there in FX has been to be short the yen, thinking it's going to weaken. Well, today we go higher because maybe the Federal Reserve won't go as hard and as fast as we anticipated. The reading of the tea leaves of what Jay Powell said on Wednesday in the Fed announcement. Why would you think that, though? With the data we got today, with the inflationary data, even the dollar weakening on the day, despite that employment cost index coming in higher than expected, despite that PCE number coming in higher than expected. I'm looking bids into the Norwegian krone, and why is that? Because we've got oil on the higher side. Let's go across to the world of commodities. Brent crude at $103 a barrel. WTI inching up $98 a barrel. All important OPEC next week. All important, of course, Chevron, Exxon, and those numbers that came out. All important is basically the fact that we think the supply side is more of an issue than perhaps some of the demand side woes that we've been worrying about. Remember, it's down on the month, but we are higher on the day. And we're seeing actually metals get a bid, maybe some optimism around overall risk on sentiment, even though iron ore was a little bit of a worry as we consider what China will do about its property market. And sovereign bonds, I mean, really a bid across the board, whether in Australia, the yields coming down significantly, in Spain coming off. Remember that Eurozone data really showing that actually the stagnation in Europe we're bracing for the second quarter didn't come to bear, only really in Germany, Taylor.
And Caroline, it's really interesting when we bring it back here to the U.S. within full faith and credit. The day moves are pretty nothing really to write home about. You're falling in yields about 2 or 3 basis points on the day, but it really is sort of the week and the monthly view coming off of a big Fed meeting, another 75 basis points, Carol. Again, for the month, we've talked about the 10-year yield falling 35 basis points, the biggest monthly decline in yields that we've had since March of 2020, and a 2-year for the month that was steady. And so that's really what it really explains that inverted yield curve, was yields lower out here on the long end without much movement here on the front end, as the Fed really has control a lot over that short-term market here. So interesting moves. We've talked a lot about some short covering, some of the quant positions going on, and maybe some of the fundamentals as well if we're thinking about slowing growth on the horizon.
But isn't it interesting? And I do think it's constantly difficult for us to square this. The enthusiasm that we're seeing certainly in the equity trade, and maybe it was just a relief trade that it wasn't that much worse for some of the big names that were reporting this week. But to see what's going on, certainly in the Treasury trade, we've got a VIX that is down to 21. To me, it just feels like we're getting a little bit too comfortable because there are still worries, especially on every day we talk about recession, not recession. There's certainly a debate out there, Tim, but you do wonder, like, how do you square all of this? How does it make sense going forward?
Well, I think it makes sense from the perspective of consumers still having excess cash. I mean, Mark Zandi over at Moody's Analytics still calculates that the average American household has, what, $7,000 to $8,000 in excess savings right now. And if prices are coming down, at least in energy, then that could last a little bit longer. But yeah, I mean, I think there's a big question about growth as we move ahead. And again, like Jimmy Lee said, pretty surprising to see an equity market that reacts like this in the face of inflation that is still printing really strong.
Yeah, I think the inflation story is really important, and the idea of whether we're hitting a K-shaped recovery again here or a K-shaped downturn. You have this story this week by Kelsey Butler and Katya Dmitriev just talking about the impossible choices that so many Americans are being faced with, and a lot of middle-class Americans as inflation remains an issue. And so the question is, what prices are really cooling and which are not?
And what of optimism around the jobs market? Because we did get anecdotal data that people are slowing down their hiring in the earnings data. The next week, we push ahead to the big data points that we get. Of course, non-farm payrolls, 250,000 is where the survey is at the moment, down from the 372,000 that we added in the previous month. But all of this around also the JOLTS data, how quickly, how willing are people to be jacking in their jobs at the moment. We get initial jobless claims, as we always do, but some of that manufacturing data is going to be really important.
I really like that you push us forward to next week when you think about some of the auto sales that we're going to get. I'm reading some of the early weekend notes that come in on a Friday afternoon. This from NatWest, looking at 270 jobs, Caroline, 270,000, which for them signals that it's an economy that is still muddling through, that has not tumbled into a recession. So really has been that focus back on the economic data.
The economic data, and you hear from officials, you hear from Treasury Secretary Janet Yellen this week, you heard from Fed Chair Jerome Powell this week, and them telling you that we're going to face a slowdown in economic conditions. How deep is that slowdown, though, and how long does it last?
Right, and they're willing to maybe deal with that slowdown, to be aggressive on the Fed to get inflation down, but you do wonder about at what cost to the overall economy. All right, guys, that's a wrap on this Friday, wrapping up the week, the month, and the day. Of course, our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will see you again, same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, wishing our TV colleagues a nice weekend as we send them off on their way to continue their program. We are too. I do think about Larry Summers, who caught up with our David Weston for Wall Street Week. You can catch that over the weekend. But he said, Jay Powell said things, to be blunt, were analytically indefensible. There's no conceivable way that a 2.5% interest rate in an economy inflating like this is anywhere near neutral. He said it was neutral in that meeting this week.
All right, be sure to catch Wall Street Week tonight on Bloomberg TV and radio. Now to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. House lawmakers are pressing to leave town for their August recess, but they're taking up an assault weapons ban before they leave town. Congressman Jerry Nadler just spoke in favor.
These military-style weapons are designed to kill the most people in the shortest amount of time. Quite simply, there is no place for them in our streets. In 1994, we banned these killing machines, and countless lives were saved. But that ban was allowed to lapse 10 years later. And since then, we have seen the predictable results. Mass shootings have increased exponentially.
Following Nadler and arguing against was Congressman Jim Jordan.
They don't care about that fundamental liberty law-abiding citizens in this country enjoy. And they're coming for your firearms.
A vote is expected within just a few minutes. Well, it's not just the Secret Service. Text messages from key Trump-era Homeland Security officials are reportedly missing from the run-up to the January 6th attack on the Capitol. Bloomberg's Nathan Hager has more from Washington.
According to a report in the Washington Post, texts between then acting Homeland Secretary Chad Wolf and his top deputy Ken Cuccinelli were lost when their phones were reset during the Biden transition. The report says DHS notified its inspector general of this in late February, but not much effort was made to recover that lost data. This adds to the pile of missing records as Congress and the Justice Department ramp up their investigations into the attack and the efforts to overturn the 2020 election. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Brokers studio. One story we want to get to, and we've certainly been in and out covering it, this one by our Anders Mellon and Josephine Walker, and it has to do with Vince McMahon, who really created WWE and really brought it to prominence and into a huge industry. The story about him leaving this company that he created.
Yeah, he built the glitzy world of professional make-believe wrestling. He carved out a new niche of American show business and amassed a fortune along the way, Carol. He survived a string of controversies, accusations of harassment, and even a federal indictment before revelations of hush money payments upended his half-century career.
Yeah, it's interesting. He's 76-year-old. He's the controlling shareholder of World Wrestling Entertainment. And on Twitter on July 22nd, he said, "It's time for me to retire. Thank you, WWE Universe." You got to keep in mind, though, he may be leaving. It'll be interesting to see maybe whether or not there's some creative aspects of the business that he stays involved in. There is some speculation, but he leaves, as we said, holding voting control of WWE, which makes up the bulk of his $3.4 billion fortune, according to the Bloomberg Billionaires Index.
The company's board says it's investigating allegations that McMahon paid millions to 3 former employees and 1 contractor to cover up his sexual misconduct. On Monday, WWE disclosed that McMahon had used company money to make, quote, certain payments, that it would likely have to restate financials, and that it had received inquiries from regulators.
All right, so it sounds like they're investigating and looking into it. I was just pulling up WWE on the Bloomberg terminal. The stock's up about 40% so far this year.
Wow.
So talk about some outperformance, and I'm just trying to take a look.
It's interesting. It's about a $5.1 billion market cap company.
Yeah, right. But they've been doing deals and certainly, expanding in terms of, there's so many streaming services and services that want content, and they certainly have been working on that to get it out there. I just want to take a look at what the stock did. It was just a little bit lower in today's session, and for the week overall, still up about 4.7%, certainly as they have been working on this issue. All right, you're listening to Bloomberg Business Week, watching us too. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is on to the trading month of August. The Dow, the S&P, NASDAQ wrapping up a busy and chaotic week, but nonetheless a gain of more than 4% this week on the S&P. This week up by 4.3% today. A big day for the U.S. equity market. Tech stocks leading the way higher. S&P today advancing by 1.4%, up 57 points. NASDAQ up 228, up by 1.9%. The NASDAQ 100 index up today by 1.8%. The Dow rallied 315, up today by 1%. Year to date, by the way, the Dow is lower by 9.6%. So the stock market wrapping up a very busy week. Tech mega caps led the way higher today. Apple, case in point, up 3.3%. Amazon surged 10.4%. 10-year yield, 2.64%. The 2-year yield, 2.87%. Spot gold up 0.4%, 17.63 the ounce, while West Texas Intermediate crude today up 2%, 98.39 for a barrel of WTI. For the majority of people who quit their job in search of higher pay elsewhere, the wager paid off even as inflation soared. According to Pew Research, 60% of those who quit between April 2021 and March 2022 realized real wage gains. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, I'm heading into a week-long beach vacation. Yes, there will be lots of margaritas. My brother Bill makes a mean one. So we thought maybe
I'll be here holding down the fort.
Well, we're all heading into a weekend. We thought it might be a good time to talk some Vice investing. And this next guest we actually caught up with in Dallas last month at the BNY Mellon Pershing Insight 22 conference. We talked about investing in what's often called Vice companies. So great to have back with us.
Dan Ahrens is Managing Director and Portfolio Manager at Advisor Shares in Investments. Joining us from Dallas. Dan, how are you?
I'm doing well. Thanks for having me on again, guys.
Well, it's great to have you back. My first question is, did you get COVID at that event? Because I did.
Oh, I did not. But
I'm
All right, that makes two of us, Dan. I'm glad to hear that you were okay after that, because Carol came back from Texas with a little gift that ended up lasting, what, Carol, about a month.
Yeah, I ended up with back-to-back COVID because I had a rebound case. It was not fun. But it was so fun that we got to meet and catch up with you and talk a little bit about Vice investing. We've been checking out some of your ETFs. They're actively managed. They invest in things like cannabis. There's a handful of them. There's also psychedelics. There's hotel. There's restaurants. They've all had a pretty good month overall. Tell us about your world and if you're seeing inflows into these funds and how you're thinking about them in today's current environment.
Certainly, and there's quite a few different funds that we have, but a lot of people have been interested in investing in certain themes. It's a good thing you can do in ETFs, and we've always espoused a little bit about investing in Vice, and what that really means though is just investing in people's habits, investing in what people do, no matter what the stock market's doing or no matter what the economy's doing. And that's why there's probably some more eyeballs on our types of funds, because the Fed's raising rates. There's all this talk about, is it a recession, is it not a recession, or are they moving the goal line? But
Dan, are eyeballs meaning that people are actually investing money in your funds?
Yeah. So, we think people should be looking at the Vice investments. Now, for investment, our cannabis funds have once again been seeing some inflows, some movement in this past month, and that might be what you're referring to. So, a few different things to talk about here, but we've always said that alcohol, even tobacco stocks, things like gaming. So these are things that have a long history of weathering difficult times or rough markets. Historically, they've done it for decades, holding up better in recessionary or rough times. I can't say they're always going to go up when the market's going down or anything crazy like that, but they have a long history of holding up.
What is now, Dan? I want to jump in here because we don't have a ton of time, and I'm really curious about consumer behavior. It's something that I've been thinking a lot about because the consumer is absolutely in charge when it comes to this economy. And I get what you're saying about tobacco. I mean, after all, it's addictive. So, in recessionary times, it's held up. Alcohol, I'm wondering, do people trade down? Because we've been hearing about, from Walmart, for example, that people are trading down when it comes to generics versus name brands. I'm wondering if we see that type of behavior when it comes to vices.
We commonly do. Now, it's been too short term. We don't really have the statistics yet for what's going on right now. But what we'll typically see, actually, in the last few years, craft beers have been very hot, and craft liquors, a lot of your smaller batch designer alcohols have been more in vogue. But if things last, if we actually go into a real recession, what you're going to see is more of the middle brands and more of the mass-produced beer holding up better than some of the other things. We might see, as you said, some people trading down from the higher-end liquors. That's true.
I want to ask you about psychedelics, because we recently in Bloomberg Pursuits did a whole thing on magic mushrooms.
The entire Pursuit section last week dedicated to it.
It's pretty remarkable, right? And talks about the psychedelics, but also consumer products. What else did we talk about?
Well, alternative meats,
right?
Based off of fungi and the root of mushroom. Really interesting stuff happening in the space.
So what are you seeing, and I'm curious about the opportunities for you since it's actively managed. Are you finding more opportunities, companies publicly held, to actually invest in?
Yeah, a few years ago, it wouldn't have been possible to have a psychedelics ETF like we do. That's ticker symbol PSIL, which is short for psilocybin. But now there are enough companies to invest in. But I want to stress to people, it's still a very small fund. These are micro-cap stocks, but we have a whole handful listed on the New York Stock Exchange or more often on NASDAQ. But people need to understand investing in a psychedelics company it's a lot different than cannabis that we also invest in. Psychedelics, we're talking about real biotech pharmaceutical companies here doing real research on mental health treatments that can be used with all sorts of psychedelics. Psilocybin mushrooms is the most common. But brain injury, PTSD, depression, we know that a lot of those drugs have been overprescribed by big pharma, and I think this is a good solution.
Yeah, we've definitely covered that in the magazine, Business Week. Dan, thanks so much. Dan Ahrens, Managing Director, Portfolio Manager of Advisor Shares Investments, joining us on the phone from Texas. Are you ready to sin?
I'm ready to sin. It just reminds me of Chris Rauscher's comment to us last week that he was, offered psilocybin on the beach at Fire Island.
It's coming, everybody. Yeah. All right, you're listening and watching Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, this is Bloomberg Business Week on this Friday. Tim Stanovic, Carol Mass are right here in our Interactive Brokers studio. We're going to wrap up with a couple of guests looking into climate change and also looking at something that is considered kind of crucial to getting us towards a more sustainable environment.
Yeah, nice way to end the weekend as we go in, especially as we see hot weather just wreaking havoc on, and not just hot weather, Carol, extreme wet weather wreaking havoc on many parts, not just our country, but the world.
It's not the heat, it's the humidity. No, I'm just kidding. I'm just
kidding. Global warming.
We got some serious stuff coming up. All right, first up, though, let's get back to the trading day, wrapping up the week, the day of the month, Charlie.
Exactly. Thank you very much, Carol Masser. A positive environment for stocks today with the Dow, the S&P, and NASDAQ all pushing higher. 4% plus gain for the S&P 500 index this week. Second winning week in a row. Today, the S&P was up 57. That was a gain of 1.4%. Dow Industrials today advanced 315, higher by 1%. The NASDAQ Composite Index today, by far the outperformer, up 1.9%, up 228 points indeed for the week. NASDAQ this week up by 4.7%. 10-year, 2.65%. The 2-year yield, 2.88%. Big move today for West Texas Intermediate crude, up 2.1%. 98.43 a barrel. Did move above 99 briefly today, and gold was up 0.6%, 17.65 the ounce. So the stock market wrapping up a chaotic week. Lots of earnings this week. Of course, we had the Fed meeting, but bottom line, winning week for the Dow, the S&P, and NASDAQ. Well, as for the market backdrop, Jimmy Lee is the CEO at Wealth Consulting Group. He was our guest right here on Bloomberg Business Week.
One thing that, I've been noticing over the last several months is that not just the consumer, but major investors were so bearish. It's been a long time since I felt that so many investors, professional investors, were so bearish that it made me feel like we could have been kind of nearing the bottom, and here we are with a nice bounce.
And indeed, today, that bounce, 1.4% on the S&P. Ed Yardeni, by the way, the president of Yardeni Research, calling the low. He said the S&P sank to a bear market low on June 16th and has been rallying ever since. Apple up today by 3.3%. Amazon surged 10.4%, but heading the other direction, we had Intel today down by 8.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic. We are live at Bloomberg headquarters in New York City in our Bloomberg Interactive Brokers studio. And we've got a couple of guests coming up that we're really looking forward to. It's all about the climate. We're going to talk about the author of a book about climate restoration, a different way of really protecting our environment and really making a difference.
Yeah, I get, it's interesting, Carol. We talk about technologies that can actually help us avoid a catastrophe when it comes to climate change. And the author, who's going to be joining us in just a second, Peter Fikowski, argues that there are actually technologies out there that are safe and effective in reducing carbon.
Yeah, this is an interesting dude. He's an MIT-educated physicist and engineer. He's worked for NASA. He's also worked at the Fairchild-Schlumberger AI Lab in Palo Alto, California. So he looks at this from a very, it sounds like, scientific way. So let's get to Peter. He joins us now via Zoom from Los Altos, California. Peter, it is good to have you here with us. We've only got a certain amount of time. Climate, anything with the climate is a big topic that you could spend hours on. Tell us about your thesis. What is climate restoration?
Well, climate restoration is very interesting. It's the goal of restoring a climate that humans have actually survived long term. And so it's much more radical than the conventional thinking of trying to reduce the damage. It's the engineering idea of we want to restore what works for human beings. Well, and it turns out that we have the technology and the finance to do it. We just need to start talking about it because we've been talking about a much worse goal.
What's interesting is I've never heard of this technology that you argue we have right now. Ocean pasture restoration, for example, synthetic limestone manufacture, seaweed permaculture, and methane oxidation. These are the 4 technologies you say that can help us get us there. Let's start with ocean pasture restoration. How does it work?
Yeah, so the four methods, first of all, the reason that you haven't heard about them is that we haven't had a goal of restoring the climate yet. These have all been around for quite a while. Ocean pasture restoration, also called ocean iron fertilization. It is the same process that nature uses to cool the planet before ice ages. And so nature removes 1 trillion tons of CO2 before each ice age. There have been 10 in the last million years. And we know how to do the same thing. And the idea is, we all know that photosynthesis, like trees, absorbs CO2. But the trouble with trees, of course, is that they end up dying after a few decades and the carbon goes back into the air when the trees rot. In the ocean, when plants grow, they sink. And then there's no oxygen in the deep ocean. And so they take the carbon with them and of course, a lot of the plants are eaten by fish and all the detritus sinks into the deep ocean. And as I said, that's how nature cooled the planet for our ice ages. And so the way this operates is, and it was tested 10 years ago. It was tested also by Mount Pinatubo 30 years ago. It's localized and it's intermittent. So they do it in eddies, which are about 100 miles in diameter in the ocean. And the eddy contains the iron. The iron is a phenomenally small amount. It's like 1/100 of a teaspoon per square meter. And within days, it turns green from blue. Blue is beautiful, but it's not green. Green is where you have photosynthesis. And then within another week or so, fish start coming in and feeding on the luncheon counter there. And off you go. When it was tested, they were told that they sequestered 100 million tons of CO2.
That sounds like a lot. What's interesting is, and we're going to continue the conversation in just a moment and maybe talk about some of the other methods. Just got about a minute here, and then we'll continue on the other side of the break. But I do wonder, at the same time, do we not also, though, need to think about reducing our carbon footprint?
Yes, we absolutely do. Well, yes and no. We need to reduce our carbon footprint. Worrying is really less effective than doing it. And so I focus on just do it. I'm planning to have an electric car be my next car when my current car wears out. And I think probably a lot of the people listening are already planning on that. So that transition is happening. But we haven't been thinking about actually restoring the climate, and especially for our young listeners. Plan on being around rather than giving up the ghost. Because if you plan on being around, then you'll pay attention to these big four solutions.
Peter, sit tight. We do want to go through a couple more of the solutions because it's interesting science, and you're right, we're not talking about this a lot. Peter Fikowski, we're going to come back to him, founder and chairman emeritus at Foundation for Climate Restoration. His book out is called Climate Restoration, the Only Future That Will Sustain the Human Race, and we'll continue in just a moment.
First, though, a check of world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Secretary of State Antony Blinken says he talked today with Russian Foreign Minister Sergei Lavrov for the first time in months. He confirmed he did discuss a U.S. proposal to bring home 2 detained Americans in Russia, basketball star Brittany Griner and Marine veteran Paul Whelan.
I urged Foreign Minister Lavrov to move forward with that proposal. I'm not going to characterize his response, and I can't give you an assessment of whether I think things are any more or less likely, but it was important that he heard directly from me on that.
Blinken characterized his talks with Lavrov as frank and direct. Officials in Kentucky say it could be several weeks before they determine the final death count from historic flooding in rural areas of the state. That's due to uncertainty about how many people actually live in those hard-to-reach communities. After an aerial tour this afternoon to survey damage, Governor Andy Beshear spoke alongside FEMA officials.
I've seen a lot. I've certainly done 3+ flights and or tours over flooded areas. This is by far the worst.
Governor Beshear says no fewer than 6 helicopters are out actively making saves, looking for survivors and directing boat crews. Some waterways are not expected to crest until tomorrow. The U.S. plans to begin offering reformulated COVID-19 booster shots in September. That decision reportedly comes after Pfizer and Moderna moved up the timelines for their vaccines. The U.S. has ordered a combined 171 million doses of those next-generation vaccines. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much, Nancy Lyons. Well, if you're looking for a summer getaway, you may want to think outside the box, and that's exactly what the Bloomberg Pursuits team did for one of their latest stories in the new issue that's currently out there.
They dispatched Pursuits writer Brandon Presser to Wales to give readers a look at the amazing culture, food, and adventure that Wales has to offer.
And in this clip from our upcoming weekend show and podcast, Bloomberg Pursuits editor Chris Rouser tells us why.
Well, every year, as you guys know, we do a list of the places to go in the following year. It's one of our holiday traditions. We do about 25 amazing, interesting places to go. And for our 2022 list, Wales was on the list, and it was Brandon's idea to do it. So he wrote up the pitch, and we included it in our places to go in 2022. And there's a real revival of Welsh culture on the international scene. So Welsh food and products and drinks are really getting a lot of attention. Restaurants and also Welsh whiskey is making a return. So Brandon had a lot of great ideas about what was going on there, and we were enticed as well. So we wanted to send Brandon and a photographer just to flesh it out and show us everything we needed to know.
That, of course, was Bloomberg Pursuits editor Chris Rouser. He joined us alongside the story's author, Brandon Presser, in this week's Business Week weekend show, which you can catch over the weekend.
Yeah, it's going to be on Bloomberg Radio this Saturday at 8 a.m. Wall Street time. Also, read more from the Pursuits team in this week's Business Week magazine, which is out now.
And don't forget, you can always also download our Bloomberg Business Week weekend podcast and catch this conversation. I have to say, every week we're like to our Business Week YouTube producer who deals with all of our weekend show as well, Ariagami. And it's like, okay, what's in Pursuits this week? And when Brandon Presser has a story, you definitely want to.
He's usually the guy who goes behind the scenes, right? He's
Yeah.
the one who goes undercover at Disney World and
Right.
gets an idea for what actually happens at Disney World when people are dressed up in those
Or
costumes.
a cool spa, or
A yacht?
or a yacht. And what's interesting is in this story, like we don't often talk about whales, right?
That's WALES.
That's right. It's not like the big whales in the ocean. But there's also a town which we can't even pronounce because it's just such a long word. Anyway, check it out.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is on to the trading month of August. The Dow, the S&P, NASDAQ all advancing today and wrapping up a big week for the U.S. stock market. Now, for the week, we had the S&P 500 index up by 4.3%. S&P 500 had its best month since November of 2020. The NASDAQ 100 index had its strongest performance since April of that same year. Tech led the gains today. Amazon and Apple soaring today. Higher revenues, Apple up today by 3.3%. The standout, though, Amazon surged today by 10.4%. Dow Industrials advanced 315 points today, up by 1%. We had the S&P up 57, a gain there of 1.4%. NASDAQ up 228, up by 1.9%. Second weekly advance for NASDAQ. The Dow, the S&P, NASDAQ this week, by the way, up 4.7%. This week, the S&P up by 4.3%. 10-year yield, 2.65%. Two-year yield, 2.88%. Spot gold up 0.6%, 17.65 the ounce, while West Texas Intermediate crude up 2%, 98.33 a barrel. So again, recapping, the Dow, the S&P, and NASDAQ all advance. S&P up 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest at this hour, Peter Fikowski, founder, chairman emeritus at the nonprofit Foundation for Climate Restoration. His new book is entitled Climate Restoration, the only future that will sustain the human race. He is still with us via Zoom from Los Altos, California.
Peter, before the break, we were going through some of the technologies that you outline in your new book. I want to continue with that and talk seaweed permaculture and exactly what it is and how it gets carbon out of the ecosystem.
Yeah, seaweed permaculture is a variation on the iron fertilization. So, as I said, the important thing in the ocean is when you grow plants, when they die, they sink where there's no oxygen, and the oxygen stays out. And with seaweed permaculture, the nutrients that are missing are brought up from the deep ocean in a large pipe, solar powered. Takes very, very little energy. And then the seaweed grows. Some of the seaweed is used, is actually harvested and sold for products, some of which sell for $1,000 a ton. And probably half the seaweed ends up falling deep into the ocean. Some of it cut, some of it just naturally falling. And it's fairly simple. The difficulty is they build a structure that the kelp grows on, and that takes some technology. But just like the iron fertilization, it's a commercial product,
right?
And so it pays for itself.
Hey, Peter, you said it's a commercial product. Let's talk and end there, because I'm wondering if this is so effective, where's the money in it? And I ask that in the question not in a cynical way, but in a way that motivates companies to do this, to make sure that we have a future.
Yes, it's an interesting challenge because we have the four pathways, and they're all self-financing. And this is the same model that put CO2 into the air. That is, we had companies selling us heat and energy, which had a byproduct of putting CO2 up. With these four products, the seaweed, the limestone, the ocean fertilization, which leads to fish, you get product which has a byproduct of pulling CO2 out.
Right.
Now, the challenge is, and this is something that we're dealing with right now, is we're afraid to list these on the open market because the customers are going to say, wait a minute, my retirement depends on it. And so we want to make sure that people doing this are primarily interested in restoring the climate for our children and grandchildren, and only secondarily interested in making money.
Well, it almost sounds like you got to have governments involved who recognize these methods and before it gets too late. Peter Fikowski, thank you so much. Founder and Chairman Emeritus at Foundation for Climate Restoration. Check out his book that has got the title of Climate Restoration in it. All right, we want to shift gears because it's kind of related, and we saw this, it caught our attention when knew we were going to be talking to Peter. We saw this because this is something that is crucial in terms of our moving to a more sustainable, maybe lower carbon world, and this has to do with EV air taxis.
Yeah, eVTOLs, air taxis that are run by electric motors, battery powered, and they've gotten a lot of attention because there are some SPACs involved, there are some really high profile names behind them. Alan Levin is aviation safety and FAA reporter for Bloomberg News. He joins us from Washington, D.C. this afternoon. Alan, this story catching my attention because it's all about the air taxis that are crashing. So take us through, first off, what an air taxi is and the promise that it holds, and then the hiccups that these companies have had on their way to getting FAA approval.
Oh, hi, and thanks very much. I cover aviation safety and was quite surprised recently when I started looking up the records, and there have been quite a few of these that have had accidents during testing. You expect things to break when you're testing them, and in these cases, there aren't any people on board, so you don't have the normal risks you might face with test pilots on board and that sort of thing. But nevertheless, it does show that some of these new designs, the new power source, which you mentioned, batteries, et cetera, can be quite challenging.
Well, and how do we put this in context? You understand the aviation world. How do we put this in terms of the kind of testing we would put a new airplane through? What's the contrast? What's the similarities?
I think the big answer to that is it remains to be seen. But I think we can tease out some clues here. It is quite rare to have traditional aircraft crashing during testing. It's not unprecedented. In fact, there was a large Airbus wide body that crashed about 20 years ago during tests, but it's very rare. Now, in this case, I was able to find at least 9, and we know from news reports there are additional ones that have happened that were not reported. And is this a death knell for the industry? I don't think so. But it is, I would say it's unusual, and at the very least, what it suggests, as I said earlier, is that this new technology is challenging.
Right.
One of the people I spoke to said, quote, "You're pushing the state of the art in multiple dimensions at the same time." And I think that's what you're seeing here.
Alan, you say that these haven't had people on them yet, but the ultimate goal is to carry people. And during our call today, our production call, talking about the program, our producer Sarah said, "You're not going to find me in one of these, or a self-driving truck, or a self-driving boat, or a self-driving car."
Because they're supposed to be pilotless, right?
Exactly. We got 30 seconds left, but talk to us about the challenge there with convincing people to get on these eventually.
Well, there are two challenges. One is, they've got to convince the regulator that these are safe enough to carry people for hire. That's quite a huge bar. But as you mentioned, you've got another very high bar, which is convincing the public that this is a viable thing. It sort of remains to be seen. We're still years out, but it's certainly a challenge.
All right. Well, again, Sarah's like, yeah, I'm not going to be on that. Yep, she's shaking her head from the control room. Alan Levin, thank you so much. Aviation safety and FAA reporter at Bloomberg News, joining us from our newsroom and bureau in Washington, D.C. Speaking of Sarah Livesey, our thanks to her, our producer, Ariel Agami, and of course, Paul Brennan, who's already started a vacation. We couldn't do it without any of them. This is Bloomberg.